Hello, my friends, and welcome to the Talking Cryptocurrency podcast. I'm your host, Jason Rigdon. On this episode of the show, we're talking to Pat Larsen of ZenLedger. ZenLedger is providing a much-needed service. They are helping you import transactions, calculate gains and income, and file your tax returns on cryptocurrency holdings. But before we get to the interview, I've got the following quick message. I really hope you like this show. I put a lot of work into it. If you do like it, would you please consider doing something for me? Give me a review on Apple Podcasts. Now, if you're a hardcore podcast listener, you are probably sick of hearing this. Every show begs for reviews, and it's a little annoying. But it does make a big difference. Those reviews help people decide to subscribe. They help guests choose which shows to go on. Those ratings and reviews for the shows are a direct way you can help this show grow. So, if you like this show and you want more, please help me. Take the time and give the show a rating and review on Apple Podcasts or iTunes, or whatever they're calling it now. Hello, and today I am with Pat Larsen of ZenLedger. How are you today?
I'm good. Thanks for having me.
Oh, yes, of course. So could you tell me a little bit about the problem you're trying to solve here?
Yeah, basically there's been increasing interest in investing in cryptocurrencies. And what people are starting to find is that the tax reporting is pretty difficult, as well as the portfolio management. So what ZenLedger.io does is it aggregates your trading activity across multiple exchanges and wallets, brings it all together. We clean up the transactions, do some things to help you save on taxes, and produce reports that you or your CPA can use to file your taxes.
Oh, fantastic. And what exchanges does it work on right now?
A large number of them. So all the major ones: Coinbase, Bittrex, Binance, KuCoin, and then on down the list. And
this is just for U.S. people?
Yeah, so we auto-populate U.S. tax forms such as the Schedule D, the 8949, and then the FinCEN 114 FBAR if you have more than $10,000 in a foreign account. We found that overseas people actually like using our product as well. And in the next couple months, we'll probably add foreign currency support, but we won't auto-populate foreign tax forms. But we do produce a very comprehensive Excel spreadsheet with all your investments, buys and sells, and that would be useful for a tax professional that's not in the United States as well.
I suppose you could use this for your local state taxes too.
Yeah. If you have local state capital gains, you can do that. Our software doesn't auto-populate any of that stuff right now. There's just there's a lot of states, but it does get you to a capital gain or a capital loss number, long term and short term, and you can use that for state tax filings.
A lot of people seem to be under the illusion or misunderstanding that you don't have to pay taxes on cryptocurrency, and that's just not true. Even if you were trading stamps, you'd have to pay taxes on that.
Yeah, that's correct. There's still a lot of gray area. The IRS hasn't come down with very firm laws, and the American Institute of CPAs has asked for clarity several times, and hasn't gotten it. The most recent tax bill specifically said that you can't use 1031 exchanges for cryptocurrency going forward. And then in April 2018, the IRS put out a statement making it very clear that you do have to pay your taxes on cryptocurrency gains as if it was a stock investment.
And it seems like maybe the IRS is getting more interested in trying to collect some taxes that they might be missing. I remember there was I think Coinbase was involved in some subpoenas. Was that right?
Yeah. So in the summer of 2017, the IRS sued Coinbase for user information, and Coinbase lost the lawsuit. And so they had to turn over records on users, I think between the year 2013 and 2015, with over $20,000 of transactions, which is actually quite a low threshold. If you just trade $1,000 back and forth 20 times, that's $20,000 of transaction history. And since then, basically every US-based exchange has realized that they're going to have to open their books in the same way that Charles Schwab and E-Trade and the New York Stock Exchange all have to fully comply with IRS reporting with regards to capital gains for their traders as well.
And is your software really intended for CPAs to use, or can someone do it on their own?
You can do it on your own, for sure, especially if you have not that complex a return. We are working with a lot of people who have all these edge cases, like they were in the Mt. Gox, theft, and they've had some other things happen, or they just want to make sure they have the ad protection because they have other assets other than just crypto. They have a 401k, a house, a legal entity like an LLC, and they use a CPA and a lawyer anyway. So our software allows an individual to run fully through the transaction, but also allows a CPA to manage multiple clients.
Okay. Yeah, because I mentioned this would be a very good tool for CPAs. They would have all kinds of, it would be very difficult without your product.
Yeah. So CPAs traditionally, it's a new class, and CPAs depend on clarity in the law and then generally some training. And, both those are lacking right now. So, we're going to release some training courses created by Andrew Gordon, who's a lawyer and a CPA. Who's been in crypto for quite a while to help like CPAs kind of understand what the laws are around cryptocurrency, where you use judgment and where things are, very bright line. And then, if someone has a lot of transactions, you're just going to need software to piece it all together because it's quite hard to track some of this sometime. If you sell one Bitcoin for, what would be the 10 Ether for the sake of math, that one Bitcoin gets fractionated into 3 or 4 chunks, and then buying that 10 Ether back happens in several chunks, and so it's difficult without software to piece that all back together.
Yeah, it's kind of funny. I feel like every time tax season rolls around, since I've been following the cryptocurrency, I just see a lot of people complaining because they all of a sudden they have all this information they have to go through and try to figure out. It's quite daunting.
Yeah, and it's like it's perfectly understandable that it's quite hard. All these systems kind of sprung up very quickly. Binance has only been around for like 9 months, and it's based in Malta now, and it was based in Singapore before that, perhaps. So a lot of these exchanges that listed many of the altcoins that people really wanted to get into didn't really bother with reporting. And that's made things increasingly difficult as well. And so it's just really useful to have software that does the grunt work for you.
So what have been some of the challenges of solving this problem?
So one is trying to figure out what is permissible under the law, and what's conservative, what's aggressive, and deciding in our roadmap what we'll build into our software to make sure that we're first protecting our clients, our customers from audit, and then from there giving them more leeway into filing the way they want to. And then the other thing is just there's a lot of exchanges. Some of them have fallen out of use, but historically you need them. So something like Kraken, you have to add because it was heavily used in 2016, but not so much this year. And data formats will keep changing, or you'll only be able to pull 3 months of data when you need to pull 12, or you'll run into other software issues. I'd say from a technical aspect, those are the difficult parts. It's all moving targets.
So what has been the reaction of some of these CPAs you might be talking to and showing them how they could help their clients?
Yeah, I mean they're quite enthusiastic about it. CPAs know that this is a new asset class that like high net worth individuals are increasingly getting into. So when CPAs start doing cryptocurrency taxes, it's a new revenue stream for them. But they're also kind of hesitant because it's ill-defined, and if they haven't done it before, it's likely that they might make some mistakes. So they're looking for some education, some backup. CPAs are not super adventurous when it comes to messing around with new asset classes per se. So CPAs are quite happy to have professional software that's vetted by CPAs and that does a ton of automation for them to make sure that things are accurate and save some time.
So do you have any ideas or thoughts on why the IRS has been so slow to kind of address these issues?
I'm not sure, really. Like, you hear competing narratives, but it certainly has been quite laissez-faire. I'd say on one side, if you're the IRS, you worry much more about the trillions of dollars being stored in traditional bank accounts and traditional tax havens like British Virgin Islands, or corporate taxes flowing through, Ireland and things like that. When you think about cryptocurrency, now it's a 300 billion market cap or something. From the revenue side, it's just not something the IRS would focus on. And if there's not a huge public outcry against cryptocurrency traders in the same way that there was SEC cries for regulation right after the Great Depression and right after the dot-com bust and the 2007 housing meltdown, no one's really clamoring for regulation. And it's quite obvious that the government is slow to bring on technical experts that understand technology and a new asset class. So they're kind of doing the prudent thing and just letting the market, kind of sort itself out. I know Congress has like a blockchain group, what they call it, blockchain caucus, but they haven't released any sort of proposed tax regulation either.
Yeah, I'm a little worried that they're going to be kind of, like I said, so relaxed about it and then overreact at some point.
I think that's the only way it ever goes.
Yeah. Yeah, that's very unfortunate because they've got so much time to give good guidance right now. And you hear a lot of frustration in the community. Yeah,
I mean, certainly around the world, you see regulators competing to attract the cryptocurrency capital, right? You see Malta and Switzerland really trying to carve out environments that are attractive to this. But still, the majority of ICOs are in the United States because the United States just has the majority of investable capital, right? So you can't ignore this market. So you'll see some regulator competition, and hopefully, the United States, when it does decide to put some regulations in effect, will kind of look at what the best policies are out there.
Have you had any contact with the actual exchanges? How do they feel about this?
Yeah, so each exchange has a strategy where they want to have full monopoly in 100% of all the trading in the world, and they don't really want to too much, pretend that there are other exchanges that they compete with. So you'll find that on the one hand, they fully recognize that their customers are also trading on other exchanges. And on the other hand, they're trying to bring in, security tokens or more altcoins so that their client doesn't ever have to trade off an exchange. So that's like step one, is not having trades across exchanges would simplify things. But then most exchanges don't do tax reporting because it incurs like almost a legal liability. And then they recognize that their clients are trading, out of 50 or 100 different countries and sometimes on VPNs and stuff like that. So it becomes pretty thorny. So in the end, exchanges, recognize that for, like say for the United States to not impose like a huge regulatory burden on them, it behooves them to have their clients like fully complying with local tax law while they try to kind of stay, a little bit removed from that process.
So what are some of your plans for the future for this project?
Yeah, I mean, I think there's a lot of interesting things coming on board. So obviously we want to continue to work with exchanges. That's where the vast majority of activity is. And then we also support, OTC and P2P transactions. We want to make sure we integrate with DAOs as they come online. And, as utility tokens come online and people start earning, income on the, the Yelp of blockchain or the Elance of blockchain, we want to fully support those ecosystems as they spring into existence. And then, as security tokens come on board, that could be like another huge opportunity as everything gets tokenized there. These are all like very potentially large markets, but we're not quite there yet with any of them.
Well, it's a great service. ZenLedger is really fulfilling a much needed need in the community for tax purposes and accounting. Is there anything I should have asked you that maybe I missed?
No, I think, we're in the window for tax season again, actually in September and October. Corporate taxes are September 15th and individual taxes are October 15th if you took the 6-month deferment. So feel free to go to ZenLedger.io and give us a try. We'd love to help you with your taxes.
All right. Thank you so much for coming on the show.
All right. Thanks, Jason.
Thanks, Pat, for coming on the show. ZenLedger sounds like a great service for crypto traders and holders. None of this interview should be considered tax advice, but the following is: pay your taxes. I'm not a tax professional, but I'm pretty sure that's good advice. If you want to learn more about ZenLedger, check out the show notes. I've got all the links right down there. You've been listening to the Talking Cryptocurrency podcast, and my name is Jason Rigdon. I've been your host. Thank you for listening to the show. If you liked it, would you please consider giving us a rating and a review on iTunes? I look forward to talking to you again soon. Have a great day.